Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at 9, noon, and 7 p.m. Eastern Standard Time. Just a fast reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, Grayscale sends a signal smart money is watching, and why this matters. Ladies and gentlemen, something important is happening in the financial markets, and it's not showing up yet in price. It's not a headline. It's not hype. It's not retail-driven excitement. It's infrastructure being quietly rebuilt. Over the last day alone, we've seen a surge in tokenized assets going live and on-chain. Not experiments, but real deployments. And when infrastructure starts moving faster than sentiment, that's usually your signal that institutions are already positioning. Thousands of years ago, Sumerians recorded transactions on clay tablets, the first known ledger systems. Imagine a Sumerian merchant struggling to keep track of grain shipments and debts, carefully inscribing every transaction to avoid disputes. Well, ladies and gentlemen, today, blockchain tokenization serves the same purpose securely, recording ownership, but on a global and instantaneous scale. Today, we're going to connect three critical dots: the acceleration of tokenization, what Grayscale is openly saying about scale, and why BlackRock, through Larry Fink himself, has made it clear where this is going. If you're holding XRP, this is a conversation you need to hear calmly, without emotion and without hype. But before we break this down, I want to thank you to everyone who takes the time to like, subscribe, and comment and share these videos. Your engagement helps get this information in front of more people, and everybody likes learning about the comment section on our page. Your support allows me to keep bringing these deep dive, high-value insights to the broader crypto community itself. Let's talk about tokenizations quietly accelerating. Over a short period of time, tokenization assets have begun appearing at a pace that's hard to ignore. Recent dashboards tracking on-chain activity now shows thousands of tokenized instruments, including stablecoins, funds, equities, and commodities already live. That matters because tokenization is not just about putting assets on a blockchain. Once an asset's on-chain, it becomes instantaneously transferable, programmable, tradable around the clock, and usually as collateral. And most importantly, it starts demanding throughput from the underlying network. This isn't theoretical anymore, ladies and gentlemen. We're seeing major platforms deploy hundreds of tokenized equities in a single move, not over years, but overnight. That alone tells you this market is shifting already faster than most people are prepared for. A hard number reset, ladies and gentlemen. Just to put some concrete numbers around this for perspective, tokenized assets today are still measured in the tens of billions of dollars, while the traditional markets they're migrating from are measured in the hundreds of trillions, ladies and gentlemen. Let that sink in. That gap is important because when you're looking at a market that's small relative to the system it's replacing, growth doesn't happen linearly. It happens in multiples. And that's why institutions are paying attention now, not later. Why this phase feels frustrating, ladies and gentlemen. Here's the psychological disconnect. Infrastructure growth rarely feels exciting. It feels slow. It feels boring. And it often happens during periods of weak price action. That's exactly why most people miss it. Being early doesn't feel rewarding, ladies and gentlemen. It feels extremely uncomfortable, unfortunately. But historically, this is where long-term positioning happens. Institutions don't chase momentum. They build exposure when sentiment is low and clarity is forming. The first inning, we're early reinforcement, ladies and gentlemen. Again, first inning, we're early reinforcement. This is why so many people underestimate what's happening now. We are still very early, folks. This is not the middle of the story. It's the opening chapter. In many ways, this is still the first inning of tokenization, folks, and most of the financial world hasn't even stepped onto the field yet. Tokenization is the next evolution of finance, ladies and gentlemen. If you zoom out far enough, tokenization isn't radical, it's inevitable. Financial markets evolved from paper systems to electronic trading to digital records. In medieval Florence, bills of exchange were created to simplify long-distance trade. I want you to picture a Venetian trader in 1450, nervously sending a bill of exchange to fund a risky shipment of spices across the Mediterranean. Guilds enforce trust and reliability in markets. Tokenized assets do the same today, connecting traditional finance to on-chain liquidity instantly and globally. What matters most is how early we still are, ladies and gentlemen. Okay? Right now, tokenized assets represent well under 1% of the global equity and bond market. That means over 99% of traditional assets have not yet moved on-chain. When you're talking about global stocks, fixed income, private credit, commodities, and derivatives, that's not trillions. That's hundreds of trillions of dollars still sitting off-chain. This is the opportunity window. What Grayscale is really signaling, ladies and gentlemen. This is where Grayscale's commentary becomes extremely important. You got to pay attention to this. You got to pay attention. It's like I always say, the map, the recce, everything. Our research, special source. Grayscale has openly stated that tokenized assets today account for only a fraction of a percent of global markets, ladies and gentlemen, a fraction. Essentially a rounding error compared to the size of traditional finance. But with maturing blockchain infrastructure, increasing regulatory clarity, and institutional-grade tools now available, they see a realistic path where tokenized markets expand by orders of magnitude over the coming years. When Grayscale talks about a potential 1,000x expansion, that's not a price target, ladies and gentlemen. That's a reflection of how small the starting point still is. Growth of that scale doesn't happen because of speculation, ladies and gentlemen. It happens because of capital markets migrate when efficiency improves. And once assets are on-chain, they don't just sit there. They move continuously. 24/7 market. To understand the scale here, imagine global equity markets operating entirely on-chain. No closing bell any longer. No settlement delays anymore. Trading, collateralization, borrowing, and settlement happens 24 hours a day, 7 days a week, 365 days a year. Think of a Dutch investor in 1620, anxiously following ships carrying spice and silver around the globe. Fortunes depend on those distant voyages. Tokenization today allows investors to follow trillions in value moving across networks, instantly, without oceans or delays. That's the environment tokenization enables, and that's why the transaction volume isn't just large, it's continuous. Why network efficiency becomes everything, ladies and gentlemen. This is the part many people misunderstand. Tokenization doesn't benefit every blockchain equally. When trillions of dollars move on-chain, settlement speed matters, transaction costs matter, reliability matters, downtime becomes unacceptable. This is why efficiency-focused networks are the real beneficiaries. The question institutions are asking isn't which chain is popular, it's which rails can handle value at scale, repeatedly without friction. This is where XRP remains part of the institutional conversation, not as a meme, but as infrastructure designed for high-speed value transfer. And this isn't theory. Institutions like the DTCC, which already settled quadrillions of dollars in transactions, are actively exploring tokenization and blockchain-based settlement. Just as Roman merchants trusted a temple to safeguard its wealth hundreds of years ago, a modern analyst at BlackRock monitors billions in tokenized assets following across AI-managed networks today, secure, transparent, and efficient. When organizations that already move value at this scale begin adopting their infrastructure, it tells you this: infrastructure is being taken seriously at the highest levels of global finance, ladies and gentlemen. Larry Fink, tokenization plus AI equals the mega trend, ladies and gentlemen. Larry Fink has been very clear about this. He stated publicly that tokenization and artificial intelligence are the two forces that will reshape financial services. Let this sink in, ladies and gentlemen, okay? Not someday, now. Why? Because tokenized markets running 24/7 cannot rely on human-driven processes. They require automation. They require intelligent systems. They require AI managing liquidity, settlement, and risk continuously. BlackRock already uses advanced AI systems internally to move and settle capital. When you combine that with tokenized assets, you get an entirely new financial operating system. That's not speculation. That's not infrastructure being built. BlackRock is positioned quietly, ladies and gentlemen. BlackRock has been expanding crypto and tokenization-focused roles globally. They're not experimenting, they're scaling. Colonial powers, ladies and gentlemen, built vast shipping networks to move silver, spices, and goods globally. Imagine the Dutch East India Company investor nervously checking manifests, knowing fortunes rode on distant voyages. Tokenization is doing the same today, building a financial superhighway that moves value instantly across the world, because the markets crypto is targeting are not measured in trillions. They're measured in hundreds of trillions. Let this sink in, ladies and gentlemen. Hundreds of trillions of dollars. Tokenization is the bridge. Ladies and gentlemen, I hope everybody had a wonderful holiday with family. Over the holiday, some truly unbelievable things did start to happen. And it's always under holiday circumstances that these things happen. We saw silver really rip people's faces off, and we threw in some things through the community tab for people to see right now. Ladies and gentlemen, when we go back to our map, we go back to everything, right? We talked about where silver was coming from. We talked about most South and Central America. We talked about some of half of that coming from Mexico. We spoke about China not allowing any more silver exports. We spoke about India, okay, making the monetization of capital. We spoke about Russia not allowing capital to leave the country. I'm sorry, silver not allowed to leave the country, or capital allowed to leave the country. We also spoke about the coming in February, silver through 401ks, okay? Ladies and gentlemen, we believe, and this is our professional opinion, that the largest Chinese silver ETF will go belly up. It's done. You can stick a fork in it. That's our prediction. It's not going to be around much longer. It's having limit down calls. The fund manager's having some issues there. And with the coming tokenized silver product coming out of the Middle East, and again, a lot of things are happening right now. And, there's certain things that the LBMA that I saw my entire career when we were doing spot trading, right? Where we would trade door bars, platinum and palladium door bars for good delivery, LBMA stamped gold bars for delivery. We had seen something very interesting, right? And again, you'll see the link for our Patreon below. It's finally here, ladies and gentlemen. It took a little bit longer. I do, look forward to seeing people who come there, who want to see, who want to learn. Well, there's a lot of things for everyone there, but you'll see that link right there. I first saw an issue with this whole situation with metals. And granted, I got to work for a lot of, governors on the board of COMEX in my career from the New York Mercantile Exchange. Some people who are no longer with us, but taught me everything, and I learned a lot. When we were trading platinum palladium door bars for good exchange LBMA gold bars through Lagamilia Antam in Indonesia, sometimes the deliveries and the quantities were not always what they were supposed to be. And that was an issue when we had to make investor dividends that were going out because people were being compensated in money, and they were being compensated in precious metals that they want to deliver to storage vault. I never forgot that lesson. But right now, you have something, what we call a non-competitive bid happening right now in the markets. The LBMA, it's broken as far as I'm concerned. It's finally broken. Now, unless they're going to want to reprice to where silver really is, they're using what's called a non-competitive bid right now. They're bidded out of the market. It's almost like they don't want to come to the sandbox and play. Okay, so hold that thought for a second. I'm going to rewind this. Ladies and gentlemen, that thing that we put up that was in China right now, they think hoarding silver is bad. They put that up there right now. BRICS is going to want to lead the future, right? And China wants to lead them. So they got to show that they're playing well in the sandbox, everybody. They got to say, yo, if you want to come over to our lunch table and leave the Western lunch table, come over to the East lunch table because we got milk and cookies at the East luncheon table, right? Well, they got to be shown that they're a good character. They can lead the world, right? Okay, so they think hoarding any form of silver right now is wrong, bad. We put up something over there from colleagues that we have over in China that we work with, and it's quite remarkable, okay? But as far as we're concerned, silver now is being repriced to what it's supposed to be, okay? Silver is now considered a critical mineral. Now, you're going to see all the things that we've spoken about. We're going to tie this in right now, the secret sauce, the spices, everything like that. Ladies and gentlemen, most of the silver that is recollected, it's not pulled out of the ground. It's basically recaptured from, different kinds of mining, other kinds of metals and everything like that. Not a lot of it's pulled out of the ground. Unfortunately, it's so critical because it's got a precious metal value and an industrial value. And like I told you before, the war of AI is a kilowatt war, okay? So you need silver for everything, right? There's just not enough about it. So in place, silver is going to be locked now in place in all these regions. And as we've been talking about, right, you're going to hear me talk about this more now when I talk to institutions and family offices and funds. There's a silver tokenized product coming out of the Middle East. Silver's locked down in places. It's not going to be allowed freely any longer, right? And as far as I'm concerned, I'm going to tie this all in right here, right now. I'm hitting you with a lot of stuff right here, okay? Because this always happens during holiday trading, a lot of different things. Back to non-competitive, bids. The whole derivatives market, I feel, is going to melt down right now. I think we've at that Chernobyl point, unfortunately, okay? A lot of people are going to be cut up like sushi right now, and there's nothing that you can do about it because you do not want to stand away in this freight train that's coming right now, okay? So you have 4 banks basically that lend to each other for this whole derivatives market in commodities. Now, these guys don't trust each other any longer, okay? They just don't. And in my professional opinion, and people that retain us in any capacity in our organization, what we have been stressing, and you're going to see a lot more of these talks in our Patreon, where I can take the gloves off and really say what's happening behind the scenes, because I just can't do that here. Silver, I believe, will be the meltdown function. When silver will not be able to be delivered from COMEX, when people start buying silver and the COMEX cannot deliver it for whatever reason, they're going to pile into gold. And when COMEX, again, will not be able to deliver the gold, you're going to see a meltdown that will spread from silver to gold to cattle to every other futures market, and that will be the beginning of the full-blown meltdown. So if the LBMA and other players don't want to take a step back from their non-competitive bids, because they're basically saying we don't have everything right now to sell to you, so we have to bid it much higher, we have to ask much higher. This is what you see right now. And it's going to be on a tear. And doing this during the holiday times, which is when they always do this, it's unbelievable what's coming right here, right now, okay? So, when we put all this up on the tranches and everything we're talking about on the maps, this is some heavy hitting stuff right here. This is some blockbuster news, right? And at the end of the day, why I'm going to tie this all into XRP and everything like that. The DTCC now has to catch up. See, because the commodities markets allowed the Western world since the end of Bretton Woods to control pricing. You have a direct challenge like that coming out of Shanghai right now, coming out of Hong Kong. They are challenging this right now, and the system has to evolve. And that's why these blockchains that we talk about, okay, Ripple, XRP, G Treasury, okay, these are big, and also what Ripple bought, the clearinghouse. They're preparing for that system of control. What Ripple gives back to everyone through XRP and what else they're doing is a system of control. Okay, they give a system of control in capital markets right now. I'm not trying to figure out the speed, what someone can do this or someone can do that. I'm looking at the whole source of control of what's happening and why. Okay, and right now there is a lot of blockbusting things happening right now. So make no mistake about this. Okay, and again, we're going to go over this in the Patreon as well. What's really happening in Venezuela? What's really happening in Nigeria? What's really happening in Cuba with crude oil and everything like that? Why? This is all happening because of the attack on the way that we price commodities. That's what it is. This is the commodity conflict right now that you'll let me talk about in the Patreon. The coming commodity conflict that is here right now is the Drago Rocky conflict and boxing match that we were talking about. It's here. Okay, now you can put your head in the ground like an ostrich, right? Or you can pack up like the wolf, like I always say, because that's what's happening right now. And make no mistake about this, in our lifetime, this is the defining moment of what's happening right now, ladies and gentlemen. And why I say this, and I go back to why XRP can't stay priced low forever. The same way that I told in other videos, I changed the wordings from, when we talked about metals, I'm saying the same thing now about cryptos, because they're going to keep the prices suppressed until they can't, and the prices will go through the roof, and they're hoarding everything right now because they need that system of control. But as the DTCC is trying to change 50 years in a small amount of time, this is why this is happening, okay? And it's going to be shocking what's happening. So when everyone sees all this happening, again, this is the big change that's happening right now, and it's pretty rough, okay? So when I tell you stop looking at the charts, the chart didn't do this, the chart didn't do that, the points this, the points that. If you're in blockchain, if you're in this space, you rather want to be a leverage trader and then worry about charts and what I'm saying really has no benefit to you, or you're in for positioning where you're going. Because where we're going right now in the introduction to the derivative market with XRP, the futures market, everything happening right now is a direct response to what's happening over in Asia right now in the BRICS. It's happening now, and they're never going to come out and tell you this on the news. They don't do that. They want a system of control. The control right now is being lost, and they have to do some other thing. Cryptocurrencies are a commodity. And when you look at a commodity, it has utility, it's consumed, it has demand. It's as old as why the butter and cheese exchange itself was. I think it's one of the most exciting times to be alive. Fortunes are going to be made right now. They will be made right now, okay? Remember, you can either be a zebra or you can be a lion. You know, you have to decide what you want to be right now, okay? That history is written for lions. It's written by the victors, okay? So right now, there's a big things right now. We're going to look back on history, okay? And that's the truth of the matter, okay? What happens to the zebra? The zebra gets eaten by the lion. So you got to decide what you want to be, okay? Where the markets are going to go. You can decide this, and this is something you got to ask yourself why you got into this space in the first place, okay? I know where I'm going, what's good for me. So at the end of the day, what a time to be alive, ladies and gentlemen. If the market feels disconnected right now, that's because price moves last. Infrastructure moves first. Tokenization is not a side trend. It's the foundation of the next financial system. And when firms like Grayscale and BlackRock openly discuss scale efficiency and automation, they're not speaking to traders, ladies and gentlemen. They're speaking to those paying attention. Holding through uncertainty is never easy, ladies and gentlemen. It's not. This is very uncomfortable what's happening right now. Because every major financial innovation, from a Sumerian merchant recording grain on clay tablets to medieval Venetian traders sending bills of exchange, to Dutch East India Company investors watching ships across oceans, started quietly, overlooked, and grew exponentially before changing the world. But it succeeded because infrastructure came first, long before sentiment caught up. Holding now is simply being aligned with history. Ladies and gentlemen, your engagement helps get this information in front of more people. Thank you so much for tuning in, for liking, subscribing, and sharing your thoughts. Have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who benefited first will understand most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves it'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, and leave your comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic, where we break down the major global banking trends, shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.